the last three sessions, Nifty had been struggling to, break past that 21,500 sort of levels. We have finally opened significantly above that. Does that open doors for 22K by year's end?
Good morning, Suyash. Yes, so the only point here is that the rally is unstoppable in the Nifty. Now, if you look at the broader chart structure, there were 2-3 days of a slight consolidative price action, a minor correction just to call it, but broadly, that doesn't change the price structure. If you look at the placement in the options data in the futures and options segment, clearly the call writers are now moving away to far off strikes at 22,000. So clearly the indications are that the markets are preparing themselves for a surprising move which can at the best extend till 22,000 by this December expiry itself. Tomorrow being the weekly expiry for the Nifty index, the put writers are positioning themselves at the strike of 21,500. So broadly, it's a very strong technical structure, highly overbought, but it's a momentum driven rally, and in such rallies, it's best to avoid the overbought parameters and just stay with the flow. So maintaining a positive view, possible targets which I look for is 22,000 in the Nifty by this year end.
All right, 22,000 is on the cards. But also want to talk about the Nifty banking index. Now, that had been a laggard for the majority of the year, has finally started participating in the rally. It has moved up by about 8%, over 8%, in fact, in December alone. Now, we have not seen these kinds of returns in a year, let alone a month. But the index had been consolidating in the last 2-3 sessions. We have finally opened above 48,000, which was the ceiling. What's the support and resistance for the banking pack, Akshay?
I completely concur with you on this, Suyash. I mean, it's been an amazing move, a surprising move, which has in fact caught the call writers, you can say, by surprise, because, at the wrong side of the markets, it's the call writers who have got stuck in this rally, which has extended for the past couple of months. As I see the bank index again here, today being the weekly expiry for the bank index, there is a lot of put writing which is positioned at the strike of 48,000 for today's weekly expiry. So 47,950 to 48,000 would be a very strong support base for day trading. Broadly, if you were to look at the support for the Bank Nifty index from the short term perspective, 47,500 is a support. Until we are above this support, there is no challenge for the trend in the bank index. Clearly 48,000 is going to be broken past, and we possibly should head for the upside resistance levels, which can extend till around 48,250 or 48,300 if it's intraday expiry. So a positive view I continue to maintain on the bank index. There is no disturbing activities in terms of a trend change as it currently reads right now.
All right.
Good morning, Akshay. I'll drive your attention to Reliance Industries. Now, you spoke about the rally. It is the only stock, it seems, that is heavyweight stock that is participating in the rally. Over 10% up the last 1 month. In the last 5 days, up 6% in profits. Today, as we speak, it is over 1% up. What do you make of this stock? Is the rally going to continue a long time, or have we topped out?
Good morning, Amit. Well, if you look at the way Reliance has been, this stock has been a strong outperformer in the last couple of months. Week on week, it's been the 5th or 6th consecutive week where positive gains have been registered. Now, from a technical perspective, it is near a resistance for the December series. 2600 is one level where significant placement is seen in call writing. Also, just for a reminder that these were the levels of 2600 which we saw in August last year, and from there we had seen a sizable correction. So my sense is there can be some profit booking for the short term at the levels of 2600. So I would suggest book profits if you are trading in Reliance. If you still hold a position from a portfolio perspective, then maybe in January still you can expect a run-up rally till 2650 at the best. So portfolio traders continue to hold. Short-term traders just who are looking from the December month's expiry perspective, 2600 is the level to book out and just stay light ahead of the expiry.
Akshay, what's your view on Nestle India now? That stock has moved up quite significantly, moved up by about 5% or so yesterday to hit a record high after the company fixed a record date for the stock split. Now, if you go back in October, they had approved, the board had approved the stock split in the ratio of 1:10, wherein one equity share of face value rupees 10 will be divided into 10 equity shares each going forward after the stock split. Now, do you expect this rally to continue, especially after the stock split? Can we expect a liquidity driven rally?
Yeah, absolutely. A liquidity-driven rally can be on the cards after the news of stock split came on yesterday in Nestle. If you look at the way the markets are moving, yesterday it was the FMCG pack which saw the flow of money in this sector. So the money has been chasing sectors day on day, and from yesterday, it's the FMCG pack which has started to look absolutely fine on the charts. Here, Nestle is undoubtedly trading at lifetime highs. The chart structure is absolutely fine. The momentum driven rally yesterday. So the support zone is 25,200 as I currently see it. And overall, this target might be extend to around 26,000 or 27,000 at the best. I see the targets extending for Nestle. But I believe from here on, you should only be considering this more of a trading target in Nestle. Positionally, it's highly overbought. I would just like to it before committing fresh funds from a medium term perspective in the stock at the given juncture.
Akshay, also wanted to pick your brains on Varun Beverage. Now, the stock has moved up about 20% or so this morning after the news came out that it's going to acquire Bevco, which is a South African-based beverage company. And what a phenomenal stock this has been for investors. You know, the kind of returns we have seen in the past few years. To put the numbers into context, in the last 5 years, the stock has given returns of about 1100%. Even this year, it's en route to become a multi-bagger. What's your view on Varun Beverage? Is that a stock one can add for long-term gains?
11% up to start the day. What else can you ask for if you are invested in the stock? Well, an absolute berserk moment, I may call it, the way the stock has performed in the last few months. And from here, if you hold the stock, I would still recommend you continue to hold this. This news is on, so maybe you might see some bit of profit booking here and there, but that does not change the broader outlook or the chart structure. I believe there is still more upside to go. 1425, 1475. These are the possible targets I see from a slightly medium term view with a time horizon of 1.5 to 2 months. Support base is 1200 from where we have seen the gap up opening today. And if one needs to get into the stock, you are thinking about buying fresh in this stock, I would suggest let's wait for some bit of dip. Ideally, 141250 is the level which gives me comfort to take a re-entry into the stock with a stop loss below 1200, targeting around 1425 to 1430 from a medium term perspective.
Okay, Akshay, that was about Varun. What would you recommend, the stocks that you would recommend for the investors today?
Yeah, from short-term trading, I have a few names here. Firstly, the stock is Aurobindo Pharma from the pharma space. Here, I'm anticipating a possible breakout, which may happen very soon. The stock is lining up for a possible break above 1060. So you may see the momentum strongly surging once this breakout is done. So buy Aurobindo Pharma, keep a target of around 1062 with a stop loss of 1018. Second trade would be in Kotak Bank. Banking space is in the limelight. Most of the banks are faring well, and Kotak Bank is one stock, the technical setup of which promises a target of 1885 and a stop loss of 1834. Third stock would be an ITC, again a defensive bet, but at the overrated levels of the market, I believe pharma and FMCG would be some of the stocks you need to have in your portfolio or your trading list. So ITC, another stock which is possible support in the making, launching for the next round of momentum. Derivative parameters are absolutely strong. So buy ITC for target of 474 with a stop loss of 445. Next would be Havels. Havels has an absolutely strong chart structure, basing out formation seen around 1400 odd levels, again setting up for a launch, target around 1405 with a stop loss of 1354. And the last recommendation would be State Bank, which has seen a strong breakout of 3-4 trading sessions back at the levels of 630, easily heading for 700 plus going ahead into the month of January. But from a trading perspective for the December series, you can easily anticipate targets till 681 and keep a stop of 643 on this trade.